Hi guys, welcome to my channel. My name is Hugo and today we're going to see what's going to be the best stocks for this week. Today we're going to do analysis of 6 stocks. Actually there are more 2 stocks that I'm not going to talk about, which is Iron Mountain with a dividend yield of 4.88%, which I'm not going to include, and another one which was a British stock which pay biannually, not quarterly, and with a dividend yield of 5%, so that's why I didn't want to include those two. But if you are interested to know about those two tickers, let me know and I'll put it on the comments. So the first ticker for this week is going to be IEP, Aiken Enterprise Depository LP. This is a stock that I actually spoke in my channel before. They have a high really dividend yield, but this is due to the stock went down quite a lot, as you can see in a graph. This company operates in investment, energy, automotive, food, packaging, and real estate. They and also in the home fashion. They have a dividend yield of 14.96. Bear in mind this is due to the stock went down quite a lot. They pay quarterly in March, June, September, and December, and they are still overvalued in 51.6%. So beside the fact the stock went down quite a lot, they are still overvalued in 51%, which is quite a lot. This for me is not a stock, but there are people that likes to invest this kind of company. For example, you have DocSign, which went down quite a lot, around 20%, and they were overvalued a lot at the time. I do recall as well Tesla that was overvalued 300%, and when I bought was around 100%. They went up around 300, and then I sold with a profit of 60% or something like that. But I got lucky. Now the market has shifted a bit. They are more focused in companies giving real results, and that's why DocSign that didn't happen, and they went down quite a lot, around 25%. The ex-dividend date for this one is on the 17th of March, so we still have plenty of time if you are using the eToro. And the financial health is 2Gs, with around 12 billion in assets and around 9 billion in liabilities. Not only because of this they have a G, but also they have a really good financial health in the overall. In terms of the market sentiment, we have a hold, and the future growth is around 130%, which is quite amazing. I really like the stock with this future growth. Beside the fact that the past performance wasn't quite good, minus 41%. But I don't know if the future growth actually will overcome or will balance the overvalued of 51%. I'm not sure, because with all this going on with the war, I don't know they're going to have the same results for this year. So I have some reservations regarding this stock. That's why for me it's a medium risk, medium high risk. The next stock is with the ticker FSK, FSKKR Capital Corp. They have a dividend yield of 10.89%, which is quite good. They work in the business development companies, which they are specialized in investment, debt, and securities. Usually, this type of companies has a really big debt, but this is not the case. They are undervalued in 42.7%, which is good. They pay quarterly in March, June, September, and December. Next dividend date is on the 15th of March. As I mentioned before, the financial health is a G, because they have, in terms of assets, around 1.1 billion, and in terms of liabilities, around 350 million on liabilities. We have a market sentiment of a hold, and the future growth is minus 39.1%, and the past performance 19.5%. So having consideration the future growth of 39%, I don't know if the dividend yield will cover this depreciation of the stock. It's going to be a bit risky, and is a diverse finance, so all the finance sector are being quite impacted because of Russia, because we lend money to Russia. Russia supposedly is going to pay, which that's not going to happen now, especially paying in rubles. So that's not going to happen, and we're going to see a really decrease on the financial sector on the upcoming months, if the war doesn't finish or doesn't stop in meanwhile. The next ticker is ARCC, RS Capital Corp. They have a dividend yield of 8.31%. They are specialized in acquisition and recapitalization own companies, so they acquire companies, they revalue, and then they sell back. This is the kind of business that they are in, and they pay quarterly March, June, September, and December. They are undervalued 34.9%, and the ex-dividend date is going to be on March 14. The financial health, we have a B because in terms of liabilities, we have around 740 million, and in terms of assets, around 700 million, which position, and also there are more information regarding the financial health is not great, so that's why they have a B. In terms of the market sentiment, we have a buy, and the future growth we have a minus 16.5%, which is not great, and the past performance is 18.1%. If you are not afraid of this future growth, go for it, but in my case, I don't think this is going to be sustainable, and having a so high dividend, meaning that they are requesting for more investments. The next ticker is one of the tickers that I have on my portfolio, which is MPW, Medical Property Trust. They are a REITs on the healthcare sector. They have hospitals around the world, and they have a dividend yield of 5.76%. They pay quarterly in March, June, September, and December, and they are undervalued in 66.9%, which is good for me. The ex-dividend date is going to be on 16th of March, so it could be a bit tight to buy this one, but you can have a chance. The financial health is a G, with 5 billion in assets and around 600 million in liabilities, so they are quite healthy with a lot of cash flow, and the market sentiment we have a hold. In terms of the future growth, we have a 12% of future growth, and the past performance is 9.3%. And this is one of the stocks that I still maintain in my portfolio, which I think it's a really interesting stock to have on your portfolio, and as giving really good dividends since the beginning. I have the stock which has been for around 1 year and has been increasing every single time. I thought in sell in the past, but I decided to keep it, and actually it's one of the stocks are maintaining me some profits comparing to the growth stocks that I have on my portfolio. Western Union company, so they are in the software sector, but basically what they do is like PayPal, which you can do payments worldwide, and they have a dividend yield of 5.3%. They pay quarterly in March, June, September, and December. They are undervalued in 65.9%, which is good. In terms of ex-dividend date, it's going to be on the 16th of March. It's going to be a little bit tight. And in terms of financial health, we're going to have 2 Bs, which is really bad. Not only because of the amount of debt that I have, which is going to be around 6 billion in the liabilities, and only 2.6 billion in assets. So we have a big discrepancy between assets and liabilities, and the rest of the financial health is not good. They don't have cash flow. This is really they are really bad in terms of financially. The market sentiment we have a hold, and the future growth is 0.9%, and the past performance is 32.9%. Although there are more players in this sector, and they're going to struggle a bit with PayPal and others than this one, and probably it's not going to be so risky, and the financial health isn't so bad as this one. BCE or BCI Inc. This is a new company for me. They operate in the telecommunication and media in Canada, and they have a dividend yield of 5.25%. They pay quarterly March, June, September, and December, and they are undervalued in 62.6%. The ex-dividend date is going to be on 14, so you don't have time to buy this one. And the financial health is going to be a B, with assets around 6 billion and liabilities around 9 billion. In terms of the market sentiment, we have a hold. In terms of the future growth, we're going to have a 7.5%, and the past performance was minus 2.9%, although we have an increase over the stock in the past. This is telecommunications in Canada. I don't quite know this stock, but it seems quite interesting. Although the financial health is something here that pushed me a little bit back. Has a good dividend yield and a good future growth. So the last week markets, the most impacted markets was actually the Chinese market, with a decrease of 7.13% actually. That forced me and pushed me a little bit lower my portfolio, where I have one ETF, which is the Chinese ETF MG, and I do have the stock Alibaba, which is one of the stocks that I have on my portfolio and has been a pain in my ass because it's been down for a long time, and I don't see that coming up on the next upcoming months. It's going to take a while for that stock to go back up. Otherwise, I'll be losing around 40% of the entire stock. And I don't have that intention. I want to sell it when it become back on positive, so I'm going to hold it until it comes up. But the sanctions that are applied in Russia is going to affect the world markets, and especially China, which has a big connection with the Russian market. So I do think that they're going to be more impacted, not only with 7%, but probably more. And this week, what actually saved me was the UK market, which went down 1.88%. And on my portfolio, most of all my UK stocks went up, covering some losses that we have on the Chinese stock and the US stock. The last week market, in terms of sectors, the most impacted sector was staples, where we have minus 5.84%, and the positive was actually the top was actually the energy sector, with the increase of gas, oil, etc. Everything went up, and we are having now in certain countries around €2 per liter. I don't know that how much is in the gallons, but it's being a lot, and actually the Irish government has reduced some taxes on the petrol and gasoline, so we can reduce the value for around 1.8, which is the value that is at the moment. If it is going to increase, yes, and probably those stocks going to stagnate until a bit, unless United States they start to produce more oil. But then we have a problem with also the pipelines, which we don't have enough pipelines to increase the input of the oil, so that's going to be a really tricky issue to fix. In terms of the stocks HeatMap, we don't have anything green except the energy and minerals, which is green, with Oxum and Chevron with a positive outcome, with Chevron around 7.72% of growth during this week, which is quite good. Now I'm regretting selling Chevron, but I didn't know that we were going to have a war. And we have here on the health sector also Pfizer, which had the increase, and they pay dividends this week as well. But in the overall, the market is quite impacted. So now let's have a look into the Bitcoin and the SP500 for this week. So in terms of the SP500, we may see a fall of around 9.77% minus, but we are starting to see here some consolidation. I don't see that we're going to reach the 3,900. We may see the 4,200 instead of the 3,900. But this is good news. At least we're starting to see here some consolidation, although the RSI is showing a downtrend momentum for the next upcoming week. In terms of the Bitcoin, similar action is happening. We are here some supports of around the 33,000, and we may see a fall of around 5,000 to 9,000 pips. The market is still under pressure. The Bitcoin is still under pressure, and we may see some longs around the 42,000 as a resistance around this value here. Although we are below the moving average, but we are still seeing a bearish market for the next upcoming week. But the same thing as the SP500, you are seeing some bearish market for the next upcoming week. The same here, it's happening. Okay guys, I hope you enjoyed the tips for this week. Don't forget to hit the subscribe button and the like. That will help me with the YouTube algorithm. And once again, thank you, cheers, and see you next week. One more thing, if you want to leave some comments, please do so, and I'll try to respond as soon as possible. So once again, thank you, cheers, and see you next week.